One of the coolest things about being involved in markets is the people that you meet along the way. And in today's video, I get an opportunity to speak with Mike Jones from Mike Jones Investing. This is the third year that we have done this. And if you haven't checked out Mike's content on his channel, you are missing out, because this dude not only is brilliant, but he tells it like it is. He has a keen insight into the markets, a feel for how they move, and he's able to deliver that information in a way that makes it understandable. In this conversation, Mike and I get to talk about the current state of the markets with the conflict between Iran and the United States. We talk about whether or not we are going to enter a bear market before this year is over. And we also fit in at the end what is going to happen with the SpaceX IPO. So I just want to thank Mike for joining me for this conversation. I had a blast doing it. Make sure you check out his channel. It is linked in the show notes. And without any further hesitation, my conversation with the one and only Mike Jones.
The fears erase, the fix is fading.
All right, ladies and gentlemen, it is a special day because we have Mike Jones back on the podcast from Mike Jones Investing. And Mike, once a year you come on the channel, and I am super appreciative of it every time that you come on, because I have so much respect for the work that you do. And interestingly enough, last year when you were on, it was around the time where the 90-day tariff pause hit, and we just got news of ceasefire yesterday. The markets are ripping. And do you think this move is real, or is this a trap?
You just saw we got more news about Netanyahu. All of a sudden he's talking to Lebanon. So, anything can be a trap. This is the one thing you can't predict. Honestly, it's crazy. It's like last year, everybody's like, we're going down, it's over. And all of a sudden one tweet sends us 6%. You know what I'm saying? And so if oil continues to drop, if this thing is real, if we're not sending troops in and all that stuff, then yeah, I think, the market can absolutely go higher, because as I was telling people yesterday, semiconductors are at an all-time new high yesterday. They just hit another new high today. Transportations hit a new high yesterday, and so I'm looking at those. I was watching the Dow and those things, and it's hard to have a bear market, which is what everybody's trying to predict, with those things leading the way. Financials started to move back up. And so, that's a, that's the thing. And so if this is real, it's great. If we're sending troops and all of a sudden oil spikes to 130, well, we're going down.
Right.
And it's kind of at the mercy of that right there, because last year, it's not like tariffs went away. He just decreased the tension between us and China. That was it. And so, that's where I'm at. And if you're looking for logic, as I was telling my son, even at his age, logic and the stock market do not go together. Logic and the bond market go together. Okay. Don't forget, I tell everybody, 2020, we shut the world down. The stock market crashed. We stayed shut down for 8 months, and we set, 62 new all-time highs in 2020, or some crazy mess with us sitting at home. So yes. Yeah, it could be.
Yeah. And it's interesting too, just because right when this war popped off, you had everybody calling for, hey, there needs to be a correction here in the markets. And we did get over 10%, IWM, Dow Jones, the Qs. The SPX came close. It was almost right there. And then you hear people who are saying that, well, there needs to be a bear market, or that AI is overblown, it's overhyped. And you have really people on both sides of the aisle. You have your Jem Carsons, who I know you reference on the channel, who's calling for the big 25 to 35% decrease. And even Tom Lee said that there's a potential of a bear market this year. Do you think, let's say that everything moves forward, that there's a deal between Iran and the United States, was that correction enough that we got, or do you think that there is still going to need to be some cooling off evaluations of these companies in the coming months?
The reason why everybody's calling for this isn't an accident. It's because if you look, you've heard me talking about, you got the banner cycles calling for it, and that's the guy who came up with that weird looking chart, who's been pretty right on for many, many years. It lines up with that, the 18-year real estate cycle, normally the business cycle, and then you got AI, which is I mean, who knows if it's what's really taking jobs, but you're just in a market where they're really not hiring. It's taking longer to find jobs. And then of course I've always said I'm in the camp of course they're going to use it to replace us because it's their biggest expense and AI does not sleep. And so, if all that comes to fruition, you would think, yes, that would drive us into a recession. I don't know anything about it because I mean, we're a consumption economy, right? 70%. And so if people don't have jobs, they're not able to spend money. It should. The biggest thing though is what's the catalyst? If you look at every recession we've ever had, there is a catalyst, whether it's the dot-com bubble, the great financial crisis from the real estate market. 2022 is not at all a recession. It was a rolling recession, but there was no recession, right? Even though they said it was going to be one, the bond market said something different. And so that's really the big deal. Like, what is going to be the catalyst? People are calling for private equity. Private equity nowhere near large enough to cause that. They're calling for that. But so that's really the big thing to start watching out for is, and again, it's always that thing like when everybody's calling for something, does it actually happen?
Yeah.
And I hate to say it, I don't want to see people lose jobs, but one of the best things that could happen overall going forward is to actually have a recession because to reset everything, to maybe get the real estate market going again eventually, because so many things are still just out of whack right now from shutting down the world. It threw off all these different cycles and everything else. So can I see it happening? Yes. And normally they do happen in these kind of election years, right? So in midterm election years. And so absolutely, I can see it happening. Absolutely.
And do you think that there's any pressure, you referenced it being a midterm election year and again, this is nothing political, but just to look at the landscape for the Republicans right now with this war, with everything happening, with the energy prices spiking, inflation more than likely going to go higher, does it give incentive to, hey, put this war behind us quickly, let's end it, because if not, then our party's in trouble come election time?
It absolutely it's in their best interest. There's no doubt. But I mean, every midterm, no matter what party's in, they usually lose the midterm. So this normally happens. And this hasn't helped, obviously. And so, but I always tell people it's not about elections. Yes, are important, but I always tell people you got to watch the bond market. And when did you see the pivot? You saw the same thing happen last April when that freaking MOVE index, which is the volatility index for the bond market, when it starts to ramp up hard, or you see yields going hard, President Trump always pivots, always starts to de-escalate down. And so that's why he moved that deadline 5 times before that ceasefire. And there's not even a ceasefire in place. Let's be honest about it. Nobody even knows what anybody agreed to. And so I said 2 weeks ago, I said, it don't even have to be true. You just got to say, we're done. Nobody's going to know, and the market's going to rip. And that's exactly what happened.
Yeah. Yeah. And that
for political reasons, it would be in their best interest to get it over with and move forward. Yes, of course.
Yeah. Well, April 22nd will be that deadline. So we'll see if it really is a deadline or if it's just, hey, we're pushing this out to May 22nd. It's a headline driven environment right now, a headline driven market. For your own approach to trading this type of market, how have you adjusted, or has the approach been the same since last year with the tariff driven headlines for you?
Yeah, the one thing, I'm not a scalper. And I do it, but I hate scalpers. It's not my thing. I like the bigger moves or whatever. And I missed, God, I can't tell you how many break evens or just paper cuts I've taken. One thing I had, once volatility really ramped up and we started seeing these headlines go all over the place, especially they were always happening overnight, pre-market. I just stopped carrying trades overnight. I just closed everything out at the end of the day, start over the next day. And then the stops got really tight. If you were in puts, I don't know, 30 minutes ago, you were in deep trouble if you didn't have that stop tight. So, that's basically how I've done it.
Okay. You talk a lot about gamma squeezes. You share a lot of the charting related to gamma in relation to options. Has this always been a focus for you in your trading or what you're watching, or why has that become a focal point for you?
No, I actually had shout out to Jim. He was a member and a heck of a trader. And he introduced me to quant data, and you can use any of them, like, unusual whales, cheddar flow. But he was really following this, and I just saw how he was looking at it, and it really does, kind of give you a roadmap of to where, all this open interest is. And this is big money. This is retail, so this is big money. And just watching the call and the put volume coming in and watching where the gamma lies. And it's like today. Prime example, I put something in Discord. All the gamble was to the upside for today on, you know, just looking at zero DTE, and there's hardly anything to the downside. And then when you looked over, all of a sudden there's this big $15 million call spike came in. And so I just said, well, let's see if price follows, you know. And what I realized through the headlines over the last probably 3 weeks, that's big money. That's the insiders. They know. That's the administration. Believe it or not, it's probably people in Israel in the administration. Iran is probably playing it. And what happened? All of a sudden, that news headline hit. I think it was probably 7 or 8 minutes later, something like that. And then we went up 0.75, 1%, whatever it is now. I don't even know. I'm not looking at it. And so I've just found it gives you a roadmap, or at least a good idea to say, it looks like we want to go this way. And if we start hitting the support or taking out a major level, that's why you're seeing these huge reversals and things of that nature. So it's just an extra tool, and I find it invaluable.
Fascinating stuff there. And then one last question here about the markets. I got 2 more for you, but if we're looking ahead here to December 31st, the end of the year, we've wrapped all this up. We've moved through the war, we moved through term elections. What do you think is the most likely outcome for the markets, and where will they be trading?
Are you saying at the end of the year?
Yeah, end of the year.
Ooh. Well, if we're going to have the correction, I think the correction, I mean, if we have a real crash come down, I think it's going to happen clearly September, August, those usual months. Because you don't want to miss November. November seems, no matter what, I always try to trade up most of the time. And so I think if we're going to have the crash, it's going to happen between probably September to October-ish, beginning of November. And then the midterms will be behind us. And then I think we start trying to rally into the end of the year as usual. I think it's where we'll be. But I mean, man, we have the crash. I don't think we're going to be recovered by then. I just don't at all.
Okay.
So, but if we have it.
Right. Well, we'll see. I'm sure that these next couple of weeks will play a role in determining where we head from here. Something else I wanted to bring up. I know that you had said that you're in the process of writing a book, and you always have such insightful nuggets on your channel, wisdom, and just talking about the things that you're teaching to your son. But can you talk to us about the book that you're putting together?
Yeah, that book has evolved. I've learned I'm not a writer. I can't stand writing, so it's very tough for me to sit down and do it. But originally, it was just going to be really an outline for parents, maybe even like teenagers, and kind of giving them an idea of where to start. Because I was raised in a poor family. My mom, they were bankrupt multiple times, no credit score, no nothing. How can you teach your kids about, finance if you don't know anything about finance? And so just off the things I've learned and everything, this book's kind of evolved now, where it's literally going to give a blueprint. It's more of a blueprint to say, not only saving, investing, how to start accounts, what accounts to start, building credit scores. Now I'm adding in there, just all kinds of stuff is going to happen. And the first one's going to be like basically for age ranges from like 7 to 17, I guess is what it's going to be. And I kind of want to do phases of life books, right? So that'd be the first phase. Second phase, maybe 18 to 25-ish, and then at 25-ish, most people are getting married or getting their first career going, and then from there, maybe do another one. So that's kind of where I'm at on it. I just find I very much understand why writers lock themselves in rooms or go get a hotel or a cabin. Like, yes, you need silence and no distraction to really harness and focus on what you're doing. So that's what I'm trying to get done with now.
Okay. Any anticipation when that will be ready to be released? Or
my hope is maybe at the end of June is what I'm hoping. That'll be, yeah. Because you got to write it and you got to figure out. I still hadn't really. I kind of want to make it a family thing and do like a self-publishing thing and get my son involved and that kind of thing. So we'll see how it goes.
Awesome. I'll definitely be a buyer and a reader of that, and definitely will share that. So I'm looking forward to putting that together. And then one final question here, Mike. So your channel's great. Again, guys, if you haven't checked out Mike's work, he publishes every day, and brilliant mind of the markets and down to earth, humble guy. So you're getting the straight dope. So, I appreciate you a lot, Mike. But from when you started with your channel to where you are now, how have you evolved, and what have you learned in your journey to producing, videos about the market?
Man, that's an interesting one. It's tough because really when you're on YouTube, you're kind of at the mercy of YouTube, right? So, There's been those times where you learn, like, do I sell out and try to do this to grow the channel? And so far, I haven't done that. Um, you know, because I see other channels, they'll do certain things and piggyback off for other channels or something like that, or maybe steal stuff from them. And so the hardest part for me is, it's not even hard for me, I guess it's easy, but it's just staying true to yourself, evolving with the market, like bringing in, you know, the data, the options flows and things of that nature. Like my favorite video of all, which I only started doing, I guess maybe less than a year ago, probably. I don't think I was doing when we talked last time. The Saturday video where I take questions and I'm able to research and learn stuff myself. That's what I like about it. Or come up with discover tickers that I didn't even know about. Oh, I never heard of this company, and then start looking into it. Wow, this chart looks really good, you know. And then that's my favorite one to do is Saturday's video for sure. And then giving your, you know, your people what they want, I guess. You know, that's another thing is understanding. I pretty much have a kind of like a loyal, I guess, base that stays with me and stuff. And I even try to get away from the daily videos really for a while, and they got upset about that. No, we need the daily updates. I'm like, all right, you know, there's those days that nothing happens. Really, you can like, well, I don't waste your time, my time, but you know, but yeah. And so that's, and the other thing is, especially now, it's talking about politics. I mean, man, people get upset so easily, and everybody's in their corners, but it's hard to separate the politics from the market now. You know, it's just gotten so intertwined. It's tough, and some people can take it, and some people can't. So. Yeah, that's hopefully that answers the question, but yeah.
Yeah, no, and those Saturday videos are tremendous. I remember one a few weeks back where you went into the impact of data centers on different regions and just the response of communities with that. And I mean, there's so many stories in the market, but the one thing that I really appreciate about your work is how, you know, you'll find these things and the story behind it, but then also show how, you know, it's not just a market story, but how it's impacting human lives and communities. Yeah. And so,
well, that's another thing I was going to mention. I'm sorry, I forgot to mention that was that report that came out the other day from Goldman Sachs saying that, I think it's Goldman Sachs. Don't quote, I think that's it. That like maybe 50% or half data centers are either going to be pushed back or canceled because they don't have the infrastructure for the power. And so if that happens this year, I mean, that is huge. I mean, you're talking about really good paying jobs going away. And so we'll have to see if that plays out. There's so much money going into that's a whole lot. We just don't know if that's going to happen or not, though. But that would be good for GDP.
Yeah. So that number came in down a little bit from expectations today, too, which to be expected with everything happening. But please check out Mike's channel on YouTube. I'll have that linked in the show notes. But Mike, you also have a group that you run through Patreon, a Discord group. Do you want to talk about that really quickly?
Yeah, it's just Mike Jones Investing, same as the YouTube channel. You just go to the YouTube channel and click on any video. The link's right down there below. Discord in there. I do a morning news brief that goes over everything you can possibly imagine in that morning news brief. Do a couple of videos a week for everybody to keep them up. Like the one I'm putting up today is like how to. I don't know if you're going to pay $600 a share for the SpaceX IPO.
Oh yeah,
doing that, but. I finally created a spreadsheet and kind of got people together, and we got some ideas and of what are some other avenues maybe you can go to look at that, because that's going to be probably the largest IPO in history. So I'll be putting that video out today. But yeah. So what we do over there, pretty simple.
And real fast. So I did have that on my list, but just kind of one more question here. So that SpaceX IPO, excuse me, is going to be massive. I guess just what's your overall take on that? Do you think that's going to be a lift overall to the markets, or do you think it's going to pull liquidity from some other tickers that maybe it's time to take profits on?
Well, you know, my question to the public yesterday was, is this going to hurt Tesla? Honestly, because, you know, Tesla is still, I think it's still the #1 day traded stock out there, even though it's been doing terrible. But, you know, people made fortunes off just owning the stock, selling calls for premium, stuff like that. And now here you go, the biggest IPO in history. The next big thing is space, right? It's like EVs were. It's led by Elon Musk. That's what he's talking about. Last time Elon Musk got infatuated with Twitter before he bought it, Tesla stock was getting crushed. Like when he gets distracted away from Tesla stock doesn't do well. And so is it going to be the new boy on the block where it becomes the #1 traded, high premiums, all this crazy mess type of deal? There's no doubt before the IPO. I mean, if it doesn't uplift all these other space stocks, which I think is what you're seeing, then I'll be shocked again. But you know, we're gonna find out. Again, I'll wait for the dip myself personally. we'll see.
Yeah, that's definitely going to be exciting. Well, Mike, I appreciate you coming on here again. Everybody, check out the show notes. Check out Mike's channel. Just a great human being, brilliant mind with the markets. And Mike, thanks so much for coming on.
Hey, I appreciate it, Jeremy, as always, man.
Hey guys, if you are enjoying this content, please smash that subscribe button. It really helps me grow the channel, and I appreciate your support.